With another year's trading coming to a close, let's look back at what happened with major currency pairs and commodities in 2019. The US dollar weakened across the board on Friday as optimism about the US-China trade deal lifted investors' appetite for risk, reducing safe haven demand for the greenback, so it's finishing the year on a soft note. The US dollar slid by 0.6% against six major currencies on Friday for its biggest single-day percentage drop since June. With Friday's loss, the index gains for the year have shrunk to under 1%, putting it on track for the smallest annual change in 6 years. Meanwhile, gloomy European economic data had prompted hedge funds to bet on a weaker euro during 2019. But some strength in recent Eurozone data, along with weakness in other currencies, have lifted the euro. The common currency was firm last week. The 0.7% gain was its biggest single-day advance since early August. For the year, the euro lost 2.3% of its value against the dollar. Speaking of the British pound, the political backdrop was bleak enough at the start of the year, forcing many investors to avoid the currency. And yet, sterling finished 2019 as the best-performing major currency against the US dollar, gaining 2.8% over the course of the year. Much now depends on what Boris Johnson does next on Brexit, with his newly enhanced mandate after December's general election. It will be a testing ride in 2020, but analysts say sterling remains one of the promising currencies for the coming quarter. After reaching $1.35 as the exit polls showed a Tory majority, sterling fell victim to buy the rumor, sell the fact activity. It sold off 6 cents before finding new bids near 1.29 mark. Sterling snapped a 5-day decline on Christmas Eve and closed the week with about a 0.75% rally that saw it briefly push through $1.31 mark. Elsewhere, in the crypto market, in a year that has been painful for nearly all of the other cryptocurrencies, Bitcoin has gained over 90%. Analysts see even greater potential gains for Bitcoin over the years to come. In commodities market, oil prices rose by more than 20% this year, but there were no sharp spikes and crude futures barely sniffed $70 a barrel despite attacks on the world's biggest oil producer, sanctions that crippled crude exports of 2 OPEC members, and gigantic supply cuts from big oil-producing countries. Brent has rallied by almost 25% in 2019. The futures contract settled at $68.70 per barrel on Friday. Meanwhile, WTI closed at $61.72 per barrel on Friday, posting a 36% gain for the year. Prices are likely to remain range-bound in 2020 as rising supplies, particularly from the United States, offset cuts from the OPEC and weakening worldwide demand, market watchers say. Meanwhile, February gold futures were up by 70 cents an ounce at 1,515.10 on Friday. Over the course of 2019, gold price has advanced by 15.34%. This week, trading volumes are expected to remain light due to the New Year's break. Global financial markets will focus on Friday's minutes of the Federal Reserve's December policy meeting for further hints on the future path of monetary policy. On the data front, the US will release reports on manufacturing activity and consumer confidence as traders look for more clues on the strength of the economy. Speaking of things to focus on in 2020, the trade war between the US and China will continue to weigh on the world economy. Then the United States presidential election is 10 months away, but players in the financial markets are already trading the politics of 2020 like a choose-your-own mystery novel, with the ending unknown. In Europe, trade uncertainty will continue to weigh on the European economy, frustrating the European Central Bank's exit from its policy of negative interest rates. And finally, there is the fate of relations between the EU and UK, which will leave the bloc at the end of January. You've watched the combined review of financial markets on Insta TV. Thank you for watching and see you back soon. Bye.